Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So yesterday it was really tough performance on euro currency. It was not absolutely unexpected because market has turned down precisely from our 105 area that we discussed. And it's XOP on hourly chart, and we said that is nearest upside target. Our prediction also has started pretty nice, despite that it was gap down opening on Monday. Market has bounced up from the confidence support, the same confidence support as we have set and discussed and treated as some vital points for the bullish scenario. So market have to stay above it to keep the bullish context, and in general this has happened. And currently, guys, we have a lot of riddles on euro currency. Well, maybe in a very short term perspective, there are not as much riddles as in a higher time frame, but in general we start from the daily chart and also take a look at the monthly chart. So if you remember, we talked about the possible brand body trade. For euro currency, it is not vital to reach major resistance area around 105.80 in November. It might happen in the next months or whatever. Within the 3 months, it is possible to do. But market also stands very close to the 3x3 moving average. So if we'll take a look here, currently it stands still above it, but with the minor retracement that could happen within today and tomorrow's session, it could drop below this area and we will not get the first close above the 3x3. This is first moment. The same story we could see on the dollar index. If on euro we see that market actually stands below the 3x3, dollar index now already stands above it, and it hasn't touched the 30% level. It is tricky moment for the brand body because the distance and differences from the current price from the moving average from the fib level very small, and it's nothing personal and perfect in this world. And very often I have seen previously that actually we've got the healthy brand body action, even if market not perfectly complete the conditions. So this is, and that brings lots of trickiness on the current performance. So directly speaking, what particular we have for this downward action, whether this just minor pullback here and market will still show another upward swing, forming some different pattern. I would say, for instance, it might be the, let's say, 3 drive, for example. It is easily possible. Or now we already stand in the starting of the brand and body that suggests absolutely different action down to the 618 major 618 support area around the parity. That will be the brand body minimum target, 98.96 fib support area, if market will show action with the brand body. And these are questions that we're still yet to answer. So currently it's impossible to do. Just too few time has passed since the market reversal. Second minor question, or lower scale question, stands on the daily chart. If you remember, we talked also about this thrusting action and said this might be the double repo if market will not touch the major 30% support. It has not touched it, and actually we have right now really good performance for the double repo pattern. We have closing below 3x3, closing above, taking and creating new top, which is perfect for a double repo. Here we see definitely sign of the bullish capitulation, just because market was not able to pass through the top and continue upward action. This would collapse straight back down, forming bearish reversal bar. And now we need to get the close below 3x3 again to get the confirmed double repo pattern. In this case, target will be at least 50%, 101 area approximately, of the whole upward action here. So as you can see, lots of different patterns might be formed here. All of them have big potential of the target potential. And currently we need to somehow estimate what particular pattern is working and what pattern we need to use. So initially, I would suggest that we could start with the short-term scale. So because all other patterns are larger, and when some days will pass, we will see what's going on actually with it. Particularly speaking, I think that we could start with this reversal bar. This is important because reversal bar suggests at least minor continuation here, and that might confirm the double repo, by the way. Besides, on intraday charts in general, this performance, as you will see, more or less interesting for taking short-term bearish position. And just to complete the discussion of the daily chart, guys, another pattern that we have here is reverse head and shoulders, as you can see. But to trigger this action and to keep more or less harmony, market has to drop somewhere to the parity or this level to match the level of the left arm bottom. So it also suggests more or less significant drop. Besides, from the classical technical analysis here, we have bullish reversal swing because its swing up is greater than the previous swing down, and it suggests that after the reversal swing, usually deeper retracement happens. So many things to consider. So from one point of view, we have clear signs of the eshousing of the bullish power, and the market could show a drop down, but at the same time, market hasn't quite reached the important resistance level. All that we have currently here in this area is just some trend lines, extension targets, but no strong fib resistance. And well, that's brings not as much confidence on the back of the expectation of the deeper retracement, let's call it in this way. So on a lower time frame, we have also nicely bearish setup. So first of all, as I said, it was the wash and rinse of the previous top and strong collapse down. As a result, we've got, as you can see, perfectly looking evening star pattern. Evening star usually works is the same manner as engulfing, and usually it takes the shape of some kind of the ABCD pattern on the lower time frame. It means that based on this pattern, EUR should try to reach at least somewhere this area. It's around 102.20, 102, maybe 80 area, depending on what retracement will be here. So that will be very short-term setup. This setup, if market indeed drop right there, will give us confirmed double repo sell pattern on daily chart, and here it also might start looking like double top. That in turn suggests another step down, if of course my pattern will not fail. That will be the next stage of our discussion. Currently, let's focus on this pattern and possible way of the position taking here. If I would plan to take the position based on this pattern, I'm still be aware of a bit deeper retracement. I'm not sure that definitely will happen, but at least when you just initiate the position, initially it will be better to place stop above this area. It's just because here market could keep harmony, show some ABCD retracement, and to form a kind of the minor hand and shoulders, as you can see here. So the chances that market still could try to reach 104.30 resistance is not zero. So it still could happen. That's the reason why initially I would suggest placing stop slightly higher. If this will not happen, market start breaking down this support area, moving down with this ABC top pattern. In this case, you could move then to break even and just see what will happen. Because currently it's a bit twofold situation. From one point of view, it might be, as you can see, just retesting of this broken trend line, showing mine the 30% to 103.93 retracement and then start downward action, or market still could try to form some ABCD pattern. ABCD pattern will not become the breaking of this bearish setup. It's just the way of the retracement. It might be a bit stronger. As you can see, the XOP is completed and market sharply has turned down precisely once had been touched. So the background, fundamental background for this dollar growth is actually a speech of the Fed member Mayers. She said that actually this just confirmed what we discussed in the weekly report. Remember that we said that recent Fed minutes are not positive. Fed members said that rate should be raised significantly higher, and I will not be surprised we will see 5.25, 5.5. They just taking a pause because they see that's no fruits of the rate change. Inflation is not decreasing. That's why no makes no sense just to move in higher, and they decided just to see what will happen. But as admin said, as mayors said, this rate should be significantly higher. So, and that has crushed the markets and stock market as well. So all this stuff we have discussed actually. So let's keep watching. Those who would like take the short position, you could use this setup, this head and shoulders potential pattern and bearish engulfing right there, evening star pattern. For the bulls, well, it's nothing to do by far. We need to see how deep retracement will be and whether stronger bearish patterns will be confirmed or not. And then we will make decision where potentially it might possibly taking the short and taking the long position. So that's all for today.